A standby letter of credit, or SBLC, is a financial instrument that provides a guarantee of payment to a beneficiary in the event that the applicant, typically a buyer, fails to fulfill their contractual obligations. Essentially, it's a promise from a bank, known as the issuing bank, to pay a specific sum of money to the beneficiary, usually the seller, if certain conditions are not met. SBLCs are commonly used in international trade to mitigate risks associated with long distances, unfamiliar legal systems, and potential non-payment. They act as a safety net for sellers, assuring them that they will receive payment even if the buyer defaults. SBLCs are particularly valuable in transactions involving large sums of money or extended payment terms. They instill confidence in both parties by providing a mechanism for secure and reliable payment. The issuing bank carefully assesses the applicant's creditworthiness before issuing an SBLC, ensuring that they have the financial capacity to honor their commitment. This rigorous vetting process adds an extra layer of security and trustworthiness to the transaction. In essence, SBLCs act as a financial bridge between buyers and sellers engaged in international trade. They facilitate smoother transactions by addressing concerns related to payment security and mitigating potential risks. By providing a guarantee backed by a financial institution, SBLCs foster trust and confidence, enabling businesses to engage in global trade with greater peace of mind. International trade, while presenting lucrative opportunities for businesses to expand their horizons, is inherently riskier than domestic trade. The geographical distance, unfamiliarity with foreign legal systems, and potential for currency fluctuations all contribute to increased uncertainty. SBLCs play a crucial role in mitigating these risks by providing a safety net for both buyers and sellers. For sellers, SBLCs offer a guarantee of payment, even if the buyer defaults on their obligations. This assurance allows sellers to confidently engage in transactions with buyers located in distant countries, knowing that they are protected against non-payment. This protection is especially crucial for small and medium-sized enterprises that may not have the financial capacity to absorb losses from unpaid invoices. Buyers, on the other hand, benefit from SBLCs by enhancing their credibility and demonstrating their commitment to fulfilling their contractual obligations. By securing an SBLC, buyers signal to sellers that they are serious about the transaction and have the financial capacity to honor their commitments. This increased credibility can be particularly advantageous when negotiating payment terms or securing favorable deals. Moreover, SBLCs facilitate smoother transactions by reducing the need for extensive credit checks and lengthy negotiation. The presence of an SBLC streamlines the payment process, allowing both parties to focus on the core aspects of the trade deal. This efficiency saves time and resources, ultimately contributing to more cost-effective and mutually beneficial transactions. In conclusion, SBLCs are indispensable tools for mitigating risks and fostering trust in international trade. They provide a secure and reliable mechanism for payment, enabling businesses to confidently engage in global commerce and expand their operations into new markets. By addressing concerns related to payment security and providing a framework for secure transactions, SBLCs play a vital role in promoting global economic growth and fostering international trade relations. Obtaining an SBLC involves a structured process that requires careful planning and adherence to specific requirements. Here's a step-by-step guide to help you navigate the process of acquiring an SBLC. Step 1. Identify the need. Begin by clearly defining the purpose of the SBLC and the specific risks you aim to mitigate. Determine the amount of coverage required and the duration for which the SBLC needs to be valid. Step 2. Select a financial institution. Approach a reputable bank or financial institution with experience in issuing SBLCs. Consider factors such as the institution's financial stability, expertise in international trade finance, and the fees associated with their SBLC services. Step 3. Prepare documentation. Gather all necessary documentation, including financial statements, business registration documents, trade contracts, and any other supporting materials required by the issuing bank. Ensure that all documents are accurate, up-to-date, and meet the bank's specific requirements. Step 4. Submit the application. Complete the SBLC application form provided by the issuing bank. Provide all requested information accurately and thoroughly. Attach all supporting documentation as instructed. Step 5. Credit assessment. The issuing bank will conduct a thorough credit assessment of your business to evaluate your financial stability and ability to meet your financial obligations. Be prepared to provide additional information or clarification as requested by the bank. Step 6. Receive the SBLC. Once the issuing bank approves your application and completes the credit assessment, they will issue the SBLC. The SBLC will outline the terms and conditions of the guarantee, including the amount, validity period, and any specific requirements that must be met for the beneficiary to make a claim. Remember that acquiring an SBLC may involve certain costs, including application fees, issuance fees, and potentially collateral requirements. It's essential to discuss these costs with your chosen financial institution up front to ensure transparency and avoid any surprises during the process. By following these steps and working closely with your chosen financial institution, you can successfully navigate the process of acquiring an SBLC and leverage its benefits to enhance your international trade transactions. While SBLCs primarily serve as a guarantee of payment, they can also be monetized to unlock liquidity and access working capital for your business. SBLC monetization involves leveraging the financial instrument to obtain funds that can be used for various business purposes, such as financing new projects, expanding operations, or managing cash flow. There are two primary methods for monetizing an SBLC. First, direct discounting. This method involves selling the SBLC to a third-party investor or financial institution at a discounted rate. The discount reflects the perceived risk associated with the SBLC, taking into account factors such as the issuing bank's creditworthiness and the underlying trade transaction. Second, bank financing. Alternatively, you can use the SBLC as collateral to secure a loan from a bank. The bank will assess the SBLC's value and your business's financial standing to determine the loan amount and terms. To monetize an SBLC, you'll need to approach potential buyers or lenders and present them with a compelling case outlining the details of the SBLC, the underlying trade transaction, and your business's financial health. Providing transparent and comprehensive information will instill confidence in potential investors or lenders, increasing your chances of securing favorable terms. Once you've identified a suitable buyer or lender and agreed on the terms, the monetization process involves finalizing the necessary documentation and transferring the SBLC to the investor or lender. Upon successful completion of the process, you will receive the agreed-upon funds, providing your business with a valuable injection of liquidity. SBLC monetization offers a strategic way to unlock the value tied up in your financial instruments and access working capital without significantly impacting your existing credit lines. However, it's crucial to carefully evaluate the costs and risks associated with monetization to ensure it aligns with your overall financial strategy. By understanding the process and options available for SBLC monetization, you can make informed decisions to optimize your financial resources and leverage these instruments to support your business growth and expansion.